Hello everyone, I'm James. Welcome to the channel. We're going to be talking about natural gas. So let's have a look at the COD report. This came out on the 31st of December, so it's a little bit old already, but it's the latest report. I want to have a look at what's going on with commercials, producers, managed money. Those are the ones that tend to go with the direction of the trend, and you can see there's some pretty good positions on here. Commercials are 562 long, 451 short, so quite high numbers, but notice the additions and subtractions. Apart from being pretty much the same sort of level, they took 4,500 off the long side, added 5,000 onto the short side, but pretty much balanced. Producers, on the other hand, a little bit less in terms of overall sizing, 188 long, 236 short, a little bit lean to the short side, and adding some more to the short side. So perhaps producers are eyeing this moving down. Notice that the chart above us, we're above the sort of seasonal average, and the seasonal average drops into this coming month and the next month. Managed money, those who are managing money, funds and institutions, 162 long, 166 short, almost perfectly balanced. Look at the reductions. So actually reducing size, just sort of on both sides of the market, getting out of the market, generally losing interest, 13,000 negative on the long side and 13,000 negative on the short side. So really sort of undecided, if anything, but perhaps the producers giving a hint that we could be leaning slightly further towards the short side overall. The non-commercials, 199 long, 317 short, and subtracting a little bit from both sides, 14,000 and 16,000. So both actually reducing, both sides reducing positions. Swap dealers, the hedgers, not much size on actually, 193 long and only 34 short. So leaning to the long side, in other words, expecting the market to go to the short side, but adding more to the short side. So again, a little bit of a confused picture. Not surprising considering you're trading at $3.50 or 60, right at the top of the overall range for natural gas and above the seasonal average, and with the view that the seasonal average will, the seasonal average drops as we go into this next month. And then other reportables, these are generally retail traders, 37 to the long side, 151 short, but reducing from the short side somewhat, 3,000 negative there, only 83 negative on the long side. So quite heavily short, but reducing those positions somewhat. Not a lot, but just a little bit. So bit of a mixed bag. However, if we look at the commercials, the producers that manage money, just to reassess, commercials pretty balanced really, adding slightly more to the short side. Producers pretty balanced as well, but also adding more to the short side. Whereas the managed money, pretty balanced long and short, and also reducing size overall, both on the long and the short side. So not a very clear picture from the COD report. Let's go and have a look at the charts. This is the Henry Hub natural gas futures at Black Bull, the broker where I trade. There's a link below if you're interested in trading at Black Bull. You also get free TradingView charts if you do that. This is a hedge account, so I'm able to buy and sell simultaneously on the same account, which you may not be able to do in the US and Canada and certain other countries. We've got this long-term trend line now, which is developing underneath the price action, going all the way back to October 2024. So it's a fairly long trend line now, beginning to develop. But what worries me about it is that we've had one, potentially two, three, four, five, six, call it 6 or 7 touches of the trend line. And we've got the price action angling downwards after that big spike high. We're fully hedged on this. In other words, we have no directional bias currently, although we have a long position and we have a short position, and that's the way I prefer to trade. If you want to know more about hedging, particularly on natural gas, I've got some videos up on this channel as well, which you can search for. So where do we go from here? I don't know. It really all depends on how this week closes, because if we look at the weekly chart, let's go to that very quickly. You can see we've got this enormous spike high week, big bearish engulfing candle. In fact, the week before that was a piercing pattern that was actually invalidated initially by this big spike up, but then sort of validated by the continued move down. We didn't close above that big, I called it a piercing pattern. It's a dark cloud cover candle pattern with a higher high closing more than halfway down the previous bullish candle's body. So all in all, a pretty bearish picture, and that's this week just resting on that trend line. So really, honestly speaking, this doesn't look particularly good for natural gas longs, despite the weather, despite the Ukraine transit deal that fell through or was reneged upon or dismantled, whatever the story was. But that's where we are. So I don't know. We'll continue to remain hedged on this, and let's see how this plays out. Let's go back to the 4-hour chart. You can see not looking particularly convincing. Yes, we had a big bullish candle which went up through all the moving averages, bouncing off the trend line. on the previous 4-hour candle. This one just sort of dripping back in again. So it's pretty difficult to determine the next direction, and I suppose a lot of it will depend on whether we can actually make some moves up today. Being Wednesday, we've got the storage report tomorrow, and obviously the weekend coming up. We're still some way away from the next rollover. So that's natural gas, and I will try and update once we unhedge this position. But for now, I'm just remaining cautious and hedged, bearing in mind that there is no clarity from the COT report. It is a week old or more at this point. And also bearing in mind that we're above seasonal highs and that the seasonal curve going into January and the early part of February is actually downwards. So the overall sort of price action is probably expected to move lower going into coming days, but we're also above that curve. So all in all, quite precarious. Remember, $3.50 is the top of the range for natural gas most of the time. $2 to $1.80 is the bottom of the range for most of the time. We don't want to be committing to long positions right at the top of the range. We're in not only the ouch, it's getting expensive part, but really quite, right up into the Saks Fifth Avenue type pricing on natural gas right now. We want to be buying and committing to long positions like we have been doing right down closer to $2, the bottom of the range. Natural gas is a very ranged market with occasional violent moves outside that range, not very much below $2, but sometimes once we get up through $3.50, $4, as you'll see. Let's have a look at that chart quickly. And let's switch this over to a weekly chart just to illustrate this. So that's where we are now at the 350, 360 level. Remember, I did say that the 200-week moving average, this purple line, would perform some sort of function in resisting this price movement higher. Despite that dramatic news on potential weather, polar vortexes or vortices, correctly to say it. Despite that, we've remained under the 200-week moving average. But let's have a look and zoom back out. You can see, although we do get violent and dramatic and huge moves outside and beyond the $3.50 to $4 level. Okay, this chart's not going back far enough. Let's go to the natural gas futures at the NYMEX. Right, that's better. This is the NYMEX chart, which goes back much further. So that's where we are now. There's the 200-week moving average, same sort of chart that I showed you on the Black Bull chart just now. But you can see most of the time we're under more or less the range that we're at the top of now. There are occasions, and sometimes quite extended periods. This was related to the Ukraine war and also what was going on in Israel and Gaza. But most of the time, you can see this is the sort of the top of the range. You have to be very careful when we're here right now. So that's not to say we can't follow this trend line and keep on moving higher and get one of these sort of magnificent, huge moves up in natural gas. But these are a rarity and not an exception to the rule, really, and not the rule. As you can see, most of the time, we languish down at these sort of levels. And actually, overall, there's a descending general downward trend line. So don't expect this to happen, these big spikes up to, $7, $8, $10, $12 too frequently, maybe once every decade or every 5 years, something like that. Let's go back to the day chart. Whilst we're on the Henry Hub, let's have a look at a couple of other things. Let's have a look at the rollover coming up. Remembering my broker, Black Bull, generally tends to roll over a week in advance. So the 29th of January, we roll over from the February contract to the March contract. So there's still quite a lot of time to go. We're on the 8th of January right now. Need my spectacles. So that's where we are. Precarious trend line, I'd say, but it's still holding. And I want to go back to my chart at Black Bull. So this is the same thing over at my broker at Black Bull, same as the Henry Hub from the NYMEX, except the rollover dates are slightly in advance. And also you can't see the rollover on the chart. It's normally represented by a single bar. So that's where we are, trading at 3.59. My consideration is perhaps to wait for a little bit of a pullback from this last sort of 4-hour bullish rally, pull back down to the 20-period moving average. Let's zoom in down there, and that would take us back to about 3.53, 3.54, which happens to be exactly where my hedge level is. So if we do get that, I might consider, and I've already sent a forenote or a warning to my private group, that I might take off the short side of the hedge, and let's see if we can get a little bit of a bounce from this trend line and another continuation of this move up. You never know when these massive moves are going to start and what they might be triggered by, but it would normally be severe weather or geopolitical concerns. We have both of those going on at the moment, so perhaps, just perhaps, both of those will play into effect and start forcing this price higher. It also all depends on what happens with this polar vortex and whether it really is going to carry on and transpire. Haven't had a look at the weather report in the last hour. Don't know exactly what's going on, but it seems like it may not be as severe as people thought. Hope you enjoyed all that, folks. Have a great trading day. It's been quite a long video. I'm going to try and divide it into a natural gas video and then the rest. but there will be one video with all of it in it at the same time. Good luck for your trading. If you enjoyed this, please subscribe, like the channel, press the notification bell, tell your friends, and help support the channel. Be much appreciated. See you soon.
Pound went up, dollar took a tumble. Charts got me feeling like I'm in the jungle. Candle flickers, markets are riddle. Lost a quid, made a bundle, ain't fiddle. Pip on the dip, got me quids in me pocket. Exchange rate games, put a rocket in me socket. Bollinger Bands, ride them like the tube. Me accounts looking tasty, fresh like new lube. London town where we hustle and trade. Forex fiddler in the game we ain't played. Streets paved with gold, just like Harry said. Broker calls, I'm up, no sleep.